Okay, so the next thing I'm going to explain is how to buy stocks. So there are different platforms that allow you to purchase, stocks of companies. The most popular trading company that allows you to purchase stocks in Canada is called Wealthsimple, and it's the number one company in Canada because it doesn't charge you any commission fees for actually buying or selling stocks. I also there's another company that I use to also buy stocks. It's from my bank, TD Bank, and this allows me to purchase stocks as well. But that charges me fees every time I buy, every time I sell. It's like $10. So it's not the most common thing people use. I just use it because I've been using it since the beginning. So I just have some money there, so I just reserved it. But yeah, if you are starting out, Wealthsimple is super helpful. So that's in Canada. In United States, there are other applications and programs you can use to buy stocks. You can do it locally with your own bank. If you have a bank, just find out if they have that program to buy stocks. They'll give you more info. Also, there are applications that you can use in your phone, like they have Quest Trade, they have Webull, they have Robinhood. So these are all platforms that allow you to buy and sell stocks. So definitely have a look at them and see which one it's the easiest for you to use, which one is the one that makes sense. So you can download them, they're free, and then just try it out to see which one works the best. Okay, so the next thing I'm going to explain is how you actually make money from investing in stocks. So let me give you an example over here. Let's say here is a Tesla stock, right? And the price over here, as you can see here, right, in August 18, 2021, the price of a Tesla stock was $688.99, right? So if you bought it at this price and then you waited until the November 4th, then the growth that you would have from the 688 to the $1,229, right? It's almost double. Okay, so it's 2 times the price that you paid for, right? So that means you would have 2 times the profit. So you got an extra $600, right? You originally put in about 600 and then you got another 600, right? So you doubled the amount of money that you have in total. So this is basically how stocks works. And as you saw, right, this is in November, and the price we were looking at was in August. So August, September, October, November, right? Just in 3 months, you were able to make $600, and you didn't really have to do anything. All you had to do is just buy it, and then just hold it for a time period, and then afterwards, because the company was doing well, they were growing, right? They were able to sell more cars, they were able to get more customers, right? These are some of the reasons why companies, grow and increase the price of their stock, because they're being able to get more revenue, more people are investing in their company. That's why the price rises. So this is a good example of how the price is increasing. Now let me show you an example what could happen when the stock price goes down. If you look at the price over here for a Tesla stock, Monday, January the 3rd, it's around $1,200, and then if you look at January the 7th on Friday, it's almost $1,000. So that's a decrease of $200, right? So if you bought it on Monday, January the 3rd, and then you sold it, on Friday, January the 7th, then you would lose $200. So you have to make sure you're buying and selling at the right time. That way you're not losing money. Now I'm going to go over 3 strategies that people use when they buy stocks to make money. The first type of trading that people do is called day trading. How this works is they buy in the morning and then in the evening they sell the stock, right? So they're not really looking at investing in a company, they're just looking to make quick money. I believe like this is the most riskiest, because if you don't really believe in the company, you shouldn't be putting your money into that company, right? So a lot of people who get started, right, they start off with this because they're very afraid to invest. So that's why they always put their money in and then always take it out, right? So it becomes like very stressful. So this is called day trading, when you invest in the same day, when you buy and sell in the same day or just a few days, right? You do this very quickly just to try to make some extra dollars. Okay, the second type of strategy for investing is called short-term investing. How this works is you take the money that you've been saving and you put it into stocks for a very short time period. So let's say like, maybe a month, maybe like 6 months or a year, right? And a lot of people who are beginners, they tend to do this because they're still not very sure. They haven't really done their research, so they're just trying it out, right? Or like they put money into a company wherein they see that it's becoming very popular, and maybe you needed the money to make another investment, right? So you pull the money back out. So when you do this for a very short time period, this is called short-term investing. Now the third strategy is called long-term investing, and this is what I prefer, and it's because it has the lowest risk. Because when you put money into a company, you give it time for it to grow, right? And let's say like 5 years to 10 years, right? You give the company enough time, to grow, and that's super healthy. For a company to grow in 5 years to 10 years, most companies grow slowly, right? And so when you believe in a company, right, and you've done your research, and you see that they have really good customers, they have really good products, they have really good service, right, and you take a sum of money and you put it into the company, right, after 5 years, right, let's say you purchase a stock for $300, right, and then after like 5 years, right, that $300 became into $1,500. That's 5x the amount of price that you paid initially, right? That's a very high profit. That's a very high profit, and you didn't even have to do anything, right? You just took some money, you put it in, and you gave it to these experts, right? These experts are the ones that are running the company. They're coming up with new products. They're the one who are marketing. They're the one who's selling, right? You're just giving them money to allow them to do that. Now, when you allow them to do that, right, and the company actually makes profit, you get the benefit, right? You get a portion of the benefit. So that's long-term investing, and that's the one that I prefer the most. Like I said, it's because it has the lowest risk, right? When you've done your research and you believe in the company and you like the product, you like the service, and you give them money, then you also give them time for them to grow, time for your money to grow as well. So that's my favorite type of investment. Which company is a really good company to start investing in? So I would recommend investing in a company that is very big, right, and that have been here for a very long time, and consistently they have been growing every single year. So to just give you an example, right, this is a very famous company. If I put in 5 years, I can check how long they've been here, right? So for example, if you look at Apple, right, they've been here for a very long time, and they've been here for a very long time. It's a really big company, right? They are $1 trillion, right? And they are growing slowly, right? If you look at the last 5 years, they've been growing slowly. They were at $30, and now they're at $180, right? So that is 6 times the price, right? 6x. So if you had invested, let's say, $10,000, that means today that price would be $60,000. Yeah, so I recommend investing in a company that's been here for a very long time and they are growing slowly. That way, you don't have a chance of losing your money. It's actually a bit safer to invest in companies like that than companies who are new, who are just starting out, who don't have a track record of, having a good performance, right? You want to invest in companies that have been here a very long time, who are doing really well, who are innovating, and who are growing every single year. So, a good company that I could recommend is Apple. Obviously, you don't have to if you like the company, if you don't like the products. This is just one example. There are just so many others that have been here for a very long time and have a really good record. So if you're starting out, it's a really, invest in companies like that have long-term growth and have been here for a long time. Yeah, so the next thing I want to talk about is taxes. People are afraid, hey, if you buy stocks, do you have to pay taxes? Yes, you have to pay taxes, but depending on what type of account you open up. You can open up a personal account, or you can open up a tax-free saving account. If you open up a personal account, that means when you make a profit, then you'll have to pay taxes on it, right? And whenever you open up your account from, either your bank or the application that you find online, right, they will give you both options. I prefer using an account that's tax-free. That way I don't have to worry about taxes. So tax-free saving accounts allow you to make an investment without having to worry about taxes. So this really simplifies the process. So I would recommend, if you are starting to invest, please open up a tax-free saving account. That way it's going to be very simple and easy, and you won't have to think about your taxes in this account. And just to sum up everything, why is it that you need to invest, and why do you need to invest in stocks? Well, the reason you should be investing in stocks is because it's very passive, right? You save money, you put it towards a company that are really good at what they do, and you give them time to grow, expand, get better products, be able to get more customers, and you'll be able to get a portion of that benefit, right? And you don't have to be working to be able to earn that money. You get it on the side just like that, right? So it's really easy to be able to receive money, right? It's really nice to be able to get that money on the side. And also, if you want to build wealth long term, you need to make investments. If you're looking to have more money in the future, well, you need to start learning about how to make more investments, right? With time, the more you are able to learn, the more you're able to practice, the better you'll get, right? It's just about researching good companies and actually making it a habit that you're saving money and putting it towards these investments every single month and every year. And then slowly, right, as you get better, you'll see that your investments are increasing, and then when you actually really need some money, you'll be able to take a portion of that and use it on something that you've been really waiting for. So I hope you guys enjoyed this video. What I would like you guys to do is in the bottom, let me know how helpful was this. Was it really? I really tried to make this a very simple video so that you guys can really understand how to invest, what is stocks. So I hope I was able to do that and you got the entire message. So let me know in the comments below, if you have any more questions about a certain company. If you would like me to analyze a company for you and how I do it, I can do that. Also, if you have questions in terms of buying a specific stock, I am planning to do that video in the future. So that way I'm going to share my screen. I'm going to show how I buy my stocks. That way you guys can get the same experience and you'll know how to do the same. So if that's helpful, let me know in the comments. If you like more content like this, make sure to subscribe. Leave me a like. It really helps, get this video in front of others so that they can learn about, saving, investing, and actually building, wealth for long term. So I hope you guys like this video. I also do, sometimes some giveaways. So make sure you are subscribed to get notified, and I'll talk to you guys in the next video.